Welcome to Tim's TV. We're going to do a quick history lesson. A lot of people remember the collapse back in '08 and '09. A credit swap derivatives. Basically, I'm going to explain what happened. Now, there was an Enron collapse. Nancy Pelosi and George Bush were paid off by companies and people that wanted to make a lot of money. So Enron collapsed. Enron was kind of a day trading company. So what they did from the lesson of Enron was change the accounting rules in the United States to mark to market, which is basically day trading rules. What it means is the accountants that report on the value of bonds or other assets, stocks, bonds, have to decide every quarter what is this asset worth if we had to sell it at the end of the quarter. Previously, to mark the market, what they would do is they look at a 5-year rolling average. So what has this asset or what are these bonds worth over the previous 5 years? That provided a very stable, doesn't go up too fast, doesn't go down too fast. It's a very stable, boring way to assess assets. But thanks to Enron collapse, it provided an opportunity for people who wanted to make a lot of money. And they got Nancy Pelosi and George Bush to push mark to market. Mark to market means the accountants have to decide if it needs to be sold by the end of this quarter, what is it worth? That creates a lot of volatility. That means if it's a hot market, the asset went up. The asset's no better than it was last quarter, but it's worth more because you think people want to buy it. Now, that feeds on itself. So next quarter, it goes up and up and up and up, and all of a sudden you have this huge asset bubble. But it's like playing with lit gasoline. It's great to run a car, it can keep you warm, but lit gasoline out of control is extremely dangerous. Once the interest rates were raised too high, which was the fault of the Federal Reserve, the bubble started to burst. The lit gasoline became out of control, and mark to market spread the lit gasoline all over the place. So all of a sudden, something that was worth more and more every quarter, now you have to sell it. Nobody wants it. Therefore, you have to mark it down. Since it's being marked down, all of a sudden the accountants started to think that this asset that's paying a dividend, it's a real asset. It represents thousands of mortgages and thousands of people are paying their mortgages, and you would get a cut from that mortgage-backed derivative or mortgage-backed security. It's not worthless, but mark to market says it's worthless because you're acting as if it has to be sold at the end of this quarter when nobody wants it. That means it's technically worthless. That created the panic. Now, what happened was when they first tried to put together the bailout deal, they wanted to revise or replace the mark to market with the 5-year rolling average. The Democrats blocked that. John McCain didn't jump on it. He should have. It was a free way to help reverse the collapse. But the Democrats blocked it, and McCain, whatever reason, didn't push it, and Bush didn't push it because his fingerprints were all over it. What happened was the first bill that Barack Obama signed after the crisis not only spent another 750,000 or 750 billion on top of the 750 they spent before the election, the panic bill to save the world. It had the reversal of mark to market. Once mark to market was gone and they went back to a 5-year rolling average on assets like bonds, all of a sudden the market stabilized and the crisis was over. Mark to market was a driving factor, not the only factor in the collapse of the stock market and the housing market. Mark to market drove up the bubble and helped blow the bubble. Now, the reason I point that out is the majority of the people in the media, and Nancy Pelosi is still around. She profited off mark to market. Her fingerprints were all over it, and it was a driving issue in the bubble and in the collapse. She may be the Speaker of the House again. So last time she was Speaker of the House, she pushed through or she got mark to market and collapsed the economy. If she becomes Speaker again after the 2018 election, look for another collapse because there's a lot of money to be made in a collapse. And maybe she pushes through mark to market again, which drove the bubble and drove the collapse. And the media are not going to be any help. You need people like me to tell you about it. And the reason why is when it was going on, the people in the media, even the financial media, didn't bring up mark to market, even though it was a driving issue. And they used terms that were intended to confuse you, like credit swap derivatives. What is a credit swap derivative? It is insurance. Very simple. It's easy to explain. I'll do it in less than a minute. When you buy a $1 billion bond, which is just 1,000 home mortgages thrown together, you just drop $1 billion. You buy insurance. So if that bond goes below a certain price that's preset in the insurance, then you get paid the insurance because you don't want to lose your entire $1 billion. It's a pretty easy subject. It's bond insurance. So once mark to market caused the bond market to go below a certain price, it triggered the bond insurance. AGI held most of the bond insurance. So they were making a very good profit selling bond insurance for decades. Once the collapse happened, all of their chips came due, or all their markers came due at once, and they began to collapse, which further drove down the prices of the bond market. Part two, you couldn't issue new bonds without bond insurance because, well, in that market, who would do it? So credit swap derivatives were just bond insurance, and the media lied to you in the way in which they explained it. That was 59 seconds. I think you understood what a credit-backed security and what a credit swap derivative is, bond insurance. Pretty hard. Everybody in the media could have done it at the time, but guess what? That crisis created more ad revenue. Ratings skyrocketed. So telling you the truth and calming the hysteria would have cost the media money. This is Tim's TV. Be careful if you vote for Nancy Pelosi as Speaker or put her in a position to be in charge, because that's what happened last time. She inflated the market and then she drove the collapse down, and the people behind her made a ton of money. History will repeat itself if you let it. Just remember what happened last time Nancy Pelosi was in charge. I'm Tim with Tim's TV. Please hit the like button below. If you like what I said or don't, whether you love me or hate me, tell everybody about me. Spread the word over the internet. You're watching Tim's TV. Don't let Nancy Pelosi be Speaker. Thank you. That's a wrap from the Super Bowl. Now back to the studio.